Alright everybody, welcome back to another video. Today is honestly just a recap of me taking no trades. Um, there's really no reason, well, there is only one reason why I didn't take a trade, and that was because of a 5-minute SMT. Um, Everything had showed up in the model, literally everything. Like literally system for system, execution for execution, everything showed up. Only thing that I just didn't really take a trade of was because we were still like we still had like protected lows from an SMT, but we ended up disrespecting it. But when we ended up disrespecting it, my entry was already gone. So I mean, with that, I just kind of took the L. Not really the L. I kind of just took no trade and just let what my trades play out if I were to enter them. And yeah, we'll just see how they did. As you can see, take profit one was definitely hit on the trade I would have been taking on. Take profit 2 is previous day lows. Um, Hopefully we get that later today. But I mean, yeah, let's talk about today's trades. To be honest, like today's like whole idea of a bias or whatever. Coming into today was honestly a bit of a tricky one. Some people, not some, well, one person that I know, he had told me that his bias was bullish, so I tried to help him understand why it was why it was like bears today. Well, yeah, why we were like short today. However, this may not happen a lot of the time, but whenever you see this, just know that it's gonna be a high probability chance for bears. So if we divide the sessions, that's London session and then Asian session, right here, Asian session. If we take the swing low from Asian session, this was market like New York PM, but technically I'll take this since it's the last swing low. I'm not going to take it from here. But if we take the swing low all the way to the most recent swing high from London session, we take our GAN box and we just stretch it. As you can see, even if we take our measuring tool, oh snap. Okay, I forgot how to take measuring now on keyboard. But anyways, oh it's shift. Okay. Anyways, whoa. As you can see, from the swing low all the way to the swing high, we were very overextended by 2.52%. Obviously, I didn't really use the measure tool, but this is just for future reference. If anyone like wonders why we were short today and you were long and you got stopped out, maybe this could help you for future reference. Again, I'm not profitable. Take everything I say with a grain of salt. But yeah, if you take your measuring tool, you literally from the swing low all the way to the most prominent hourly swing high. Because remember, we're looking at high time frame ranges. When you're too zoomed in, you're gonna be looking at you're gonna have a bias messed up. That's why if you look at the daily, 4 hour, or the 1 hour, most likely the 4 hour and the 1 hour, it'll tell you what you need to know for intraday trading. Daily is really just for swing trading, to be honest. You could use daily for intraday trading, but I barely use the daily anymore. If you look at my past videos, I used to use the daily hella. Now I'm barely using it, only like for like swing and like weekly trades, like for my predictions that you saw in last video. But yeah, literally just look at the top from the swing low to all the way to the most prominent swing high. We were overextended by 2.5%. What else do we have? Whoa. Okay, what else do we have? We had multiple imbalances that needed to get filled. As you can see here from London session, none of the sessions ended up dipping into prominent, dipped into any of the imbalances until we got to London session, almost into New York AM pre-market. But by the time we got to New York AM pre-market, we were still in this range. However, if we take equilibrium of the whole range, like I said, we have not hit equilibrium at all. So remember, we still need equilibrium. Previous day highs was already swept. So if anything, that could honestly, I don't really use previous day highs to be swept because remember, previous day highs can be swept, but if price action below is already balanced, we're probably gonna trend higher. But previous day lows was swept. I mean, previous day highs was swept. We weren't balanced, so we had to come down and balance, come into previous day equilibrium, and now potentially will probably even come down to previous day lows, just because we overextended way too far from last night AM session. I mean, not AM session, last night's session. So with that in mind, right, coming into the market, what do we have on the hourly? Coming into the hourly, I was already bearish just because of the hourly breaker structure. We had the hourly breaker structure, but we didn't have any retrace into the gap. But we ended up having a retrace into this gap as well. We ended up having an hourly break right here. We ended up having our microstructure shift, whatever you want to call it. And then from there, we also had a fair value gap. And then what happened in this fair value gap during 9 a.m. open, we ended up coming into this gap and then rejecting from it. With that in my mind, I'm like, okay, we are bearish. However, we had news today. We had news at 10 o'clock, pending home sales, and news did not do anything. But however, if you look at the 4 hour, because remember we have to zoom out to understand the bigger time frame. Let me remove all these drawings. Let's just look at these two, right? This is 4 a.m. Asian session open to 2 a.m. I'm pretty sure. Oh no, till 10 p.m. Asian session. So this right here is a 4 hour gap. My thought process was if we inverse the gap at 10 a.m. open, chances are we are gonna continue higher. And I've said this a lot previously in the most recent previous trade videos when we were in a gap. If we stay in a gap and we reject from it, we are probably going to continue with that gap trend. Like say for instance we didn't come in down in versus gap and we like closed somewhere above above the 50% or we close literally out of it, we're going to continue higher. But if we inverse it, more chances than not we're going to continue to inverse and come down for the next prominent low or whatever. That was my thought idea. 10 a.m. I was like, okay, we inverse at 10 a.m. I would be able to look for a trade and I'll still be able to be short. Okay. Let's go down to the 5 minute because this is where like everything really gets like juicy, I guess you could say. Um, I kind of wanted a little a session high, not session high, pre-market highs or some type of high to be swept before we continued lower, but we ended up not getting that. As you can see, we ended up not having anything swept. We just pretty much just dumped to the market. We didn't really tap into anything. We ended up creating a breaker, and we never even came into this breaker. I guess you can count this as the breaker, but I would really count this as the leg down. But you can count this leg down. We ended up coming into this breaker and rejecting from it. But to be honest, I don't really use pre-market confluences except for the first presented 15-minute fair value gap. We didn't have any first presented 15-minute fair value gap, so like I said, we just literally just came in and just dumped straight up. Macro hit, and this is where things were honestly a little bit tricky for me. We ended up creating an SMT. I'll just delete these for now because I'll show you guys SMT. We ended up creating an SMT ski right. Was it right here? Yeah, it was right here. One second. Okay, we ended up creating an SMT right here, and this is where things for me got a little bit not yeah tricky to say the least, but mainly just got me mixed biased, which honestly, not really. Yeah, it was really just a mixed bias to be honest, because I was originally bearish. However, I have seen a scenario play out where I think it was actually really recently, actually, where we had an SMT from these lows, from these Asian session lows, to the what do we call it? To New York lows that were created, and then from there we ended up inversing this gap, and then we continue higher to these these other liquidities, session, well, resting liquidity, buy stops, whatever you want to call it. However, this is where things got a little bit tricky. We ended up creating that, and then with that in mind, we ended up inversing this little 5 minute gap, which led me to believe we were going to continue stronger. But however, Nasdaq did not want to push higher, and we ended up taking out an internal high, which ended up creating an internal SMT. Nasdaq was still pushing low. We didn't have the volume to push high here. We didn't have enough buying power, buying liquidity to just push up, which was pretty unfortunate. Which was why this SMT was pretty much dookie. Excuse me, was pretty much ass. But we ended up creating the 1 minute SMT. We ended up taking out buy side on ES. But like I've been saying recently, I'm not taking trades on. I don't like to take trades where liquidity has been swept because more times than not when um what was I saying? Oh yeah, more times than not when when the liquidity hasn't been swept and there is a divergence with between the two, the one without the swept liquidity tends to have the most power. Not most power, tends to have more volume. More times than not, obviously the one that swept liquidity will follow along, but I just like the one with that didn't sweep liquidity is because it has more power. But anyways, we swept buy side. We ended up putting in that SMT. This was literally my model coming into a freaking dream. Let's look on Nasdaq because this is where I was looking at the most. We had the SMT put in. We ended up taking out this buy side. We ended up having this fair value gap, and we ended up getting a tap into that. We also have this fair value gap game ran through. We also had a CISD change in the state. You're probably wondering how is it a change in state because it's a series of up close candles, which ended up changing the state of delivery from where we were going from bullish to bearish again. This is the actually like the reversal one because it literally shifted from bullish to bearish. One of my homies was like, um, isn't it supposed to be reversal? You could also use for continuation since that's what I mainly use it for, but this was technically a reversal one because literally we ended up closing below it, we ended up respecting it, and ended up inversing this gap. The entry I would have put was on would have been right here after this displacement. Only reason why I didn't enter was because again this SMT was technically still protecting it until we really closed out of it, like right here. But on the 1 minute it would have been like right here, well right here to right here, and by then I already missed the entry. So I mean yeah, honestly, although the model presented itself like pretty calmly, um, I don't regret not taking it because at the end of the day, like you can have models, but at the end of the day, the SMT could tell a different story. So I just put the mock on like where I would have entered. This literally would have been the exact same thing, and yeah, take profit one would have been hit, and I'm pretty sure take profit one was literally just um 15-minute lows or 5-minute lows. Oh no, that was the beginning of this 5-minute order block. Yeah, it was this 5-minute order block right here, and then my last take profit would have been previous day lows. But I would have got stopped out break even, or probably would have got stopped out in profit if I trailed stops. But yeah, that's pretty much the trade for the trade recap for today. Only reason was just because of the SMT. I just didn't feel it wasn't really like it was more like a confident matter. The model showed up. I'm not gonna lie. We ended up having the model. We literally came in straight up freaking we literally respected everything. SMT gets put in, buy side got swept, SMT gets put in, we ended up having this gap, the gap gets tapped into, and we ended up having another gap gets ran through, CISD gets put in, we ended up having a retrace back into the CISD. This was textbook. Literally freaking textbook to what I literally freaking do. Genuinely textbook. And stuff like this I literally love because it's like damn, we have one not we don't have we have one but two but three freaking confluences, and on top of that we also came into equilibrium, which is why I had the 79, well which is why I had my fib extension from the swing low to the swing high, well the swing high to the swing low. We ended up coming into equilibrium, and as well we also disrespected the 79% fib tool with the displacement. We also disrespected that heavily, so literally my entry would have been around the 100% right here. Everything lined up for shorts. We just had that SMT. Otherwise, today would have been a clear textbook short trade. But I mean, yeah, it's part of the game, man. I don't really care. I'm only up one trade this week, but I mean, that trade was pretty freaking awesome. Hopefully we can actually get a trade tomorrow. It's Thursday. Tomorrow's Friday. Um, consumer sentiment, I don't know. I mean, it depends. If we're in a gap, I'll probably wait for that news to come out. But until then, if I see a setup, if I see my setup that I like, setups that I like, and then I'm used to taking, I'm gonna take this because this was as clear as freaking day. I don't know if anyone trades this model, but this is, I think this is Justin's model, but whatever. This is literally just so sexy. I didn't even watch his model. I think I just watched like 10, 15 minutes of it, and I was like, huh, this is exactly what I trade. But whatever. Other than that, I hope you guys enjoyed the video. I'll see you guys in tomorrow's video. I love you guys. Peace.